Today I'm joined by Tim Ridley, our Deputy Chief Investment Officer. Tim, thanks very much for joining us. There's a bit of uncertainty in the markets as we see significant change because of what's happening in the US banks and also the European banks. Can you just tell the listeners a little bit about what's happening?
Thanks, Sean. Yes, the environment has changed a lot over the last few weeks. Prior to that point, what we had is a lot of inflation in the global economy and also in the Australian economy. And what central banks were trying to do was raise interest rates progressively, although they raised them very quickly because they were slow to raise interest rates initially. So they were trying to catch up, if you like. And through that process, what we've seen is some of the riskier behaviours been exposed. And one example of that is some of the banks in the US. So some of the banks in the US have had bank runs. Depositors have tried to withdraw money from the bank, and eventually the bank didn't have enough money to provide the depositors, and the Fed needed to step in, and as a consequence changed the rules. And through this process it was quite destabilising. It created some fear in markets, particularly in relation to the US banking system. We've also seen some of that fear gravitate across to Europe with Credit Suisse, and Credit Suisse has been rescued, if you like, by UBS through an announcement over the last day or so in relation to UBS buying Credit Suisse at a very low price.
And so, Tim, for our defined benefit employers, the investment markets and investment performance has a pretty significant factor on the VBI. Can you give some insight to our DB employers on possible implications in what's happening in the banking sector?
Yeah, so we've seen the VBI gravitating lower, and that's as a consequence of lower returns. In the most recent few weeks, we've had equities falling. We've also had bond yields falling. That's providing a bit of a buffer in terms of the decline in the VBI. The VBI for DB LASIF still sits above 100. The most recent estimate is just above 102. What we anticipate, and we're not sure of this, but we anticipate some further downward pressure on the VBI as we expect some further downward pressure on equities, and it could breach the 100 mark, and that ultimately could result in a reassessment of the plan further down the track. But that is uncertain at this point in time, but it is necessarily a risk.
Thanks, Tim. And so to our DB employers, we continue to monitor the VBI daily currently. We are issuing monthly updates, and that's available on our website. As always, feel free to contact one of our client partnership managers who looks after you, or our contact centre for any other updates that you're looking for. Until next time, thanks for listening.